All right, guys. Good evening, everybody. So very quickly, we will be talking about multi-time frame structural correlation. Okay, and as the name implies, multi-time frame structural correlation tries to marry structure between time frames. Okay, I've always said that price is fractal. Okay, if price is fractal, it means that each time frame should be able to complement each other when it comes to the behavior of price. Okay, I'll be going in as quick as I can and hitting the nail on the head so we don't spend too much time on this video. Okay, and then prior to this video, I had talked about on the first video on multi-time frame on our market structure. I had mentioned the fact that our higher time frame runs are our lower time frame trends. Okay, so where we have simple runs on our higher time frames, clear higher highs and higher low, higher high, higher low, higher high, higher low. On our higher time frame, for example, on our 4-hour time frame, instead of this higher high we're trying to create, we actually have tiny higher high, higher low, higher high, higher low, higher high, higher low forming on the M15. So where we have a run on the 4-hour time frame, we have an actual trend on the M15 time frame. Okay, and don't forget I'm talking multi-time frame structural correlation. We're trying to see how the fractal nature of price exists and then how price behaves when we have price do certain things on the higher time frame. What do we expect to see as a transposition of that behavior on the lower time frame? And I'll be talking M15 as lower time frame or mid time frame, and then M1. Okay, so just for guidance, the white arrows are the white directions are the 4-hour time frame. As you can see here, the yellow would represent my M15 time frame, and then the green will represent my 1-minute time frame. Okay, so we've had price create a clear higher high and higher low formation, right? Giving us this strong low at this point and giving us this weak high at this point. I explained the concept of strong lows and weak highs. I will recap very quickly. It is called a strong low because it was able to break out and violate the previous high that existed before it was created. Okay, so the moment this strong low was able to violate this high, it became a strong low, or better put, the moment this low was able to violate this high, the previous high that formed before the low, it automatically turned this low to a strong low and turned this high to a weak high. Okay, so the concept of this in theory is that price is not supposed to break below this low. This is our structure. Everything that happens inside of this structure from here, right? Okay, I think I just have to bring out my marker. Everything that happens inside of here, right, to here, okay, is substructure, is intermediate structure, is inner structure, is minor structure. Okay, so the behavior of price inside here is minor, is sub, is intermediate. Okay, what we have from here to here is primary. Everything inside of this range is intermediate. Okay, so this is our protected low because in theory, we are looking at price not breaking below this level, because a break of this level only tells us that we'll have sellers interested in the market. Okay, we have price break below this level, break below this strong low. We have violated the strong low, and then we're looking forward to creating new lower highs and lower low, continuing the downtrend. Okay, so failure to do that, it means we are still inside of this uptrend, and every other thing inside of this range is substructure. All right, so like I said, the yellow would represent M15 and then the green would represent M1. So I'll be taking you through a structural bias from our 4-hour time frame down to our M15 time frame and then to our 1-minute time frame. What are we expecting? What do we expect to see on price? What is the behavior? What is the price action inside of this run? Okay, so we've had price give us weak highs or a strong strong lows rather, sorry, and then weak highs, and then we had price run to the upside. Now, mind you, inside of this run, we have series of higher highs and higher low movement, but I would not want to emphasize on that. And then we got to a point where it was difficult for price to break above, probably because of some level of supply that was tested. Now, do not forget that on your higher time frame, on your 4-hour time frame, you may be seeing a slight pullback of this sort. then a continuation, right? Do not forget that, okay? But then we are trying to establish what happens inside of the minor trends, inside of the sub trends, inside of the other trends that are below the M50, the 4-hour time frame. Okay, so yes, we would certainly have a change of character on our 4 hours time frame. Don't forget, we have not taken out structure. We have only broken character. Okay, we only changed character on the 4-hour time frame. Now, bear this in mind. Your change of character on your 4-hour time frame is a full break of structure on your M15 time frame. Why? Because like I said, your 4-hour runs are your 15-minute trends. Okay, so where you have a mere change of character on the 4-hour time frame, inside of the 15 minutes, you have an actual break of structure. Where you have a break of structure or a change of character, rather, inside of the 15 minutes, you have an actual break of structure on the 1-minute time frame. I'll go over that again. Where you have an actual, where you have a change of character on the 4-hour time frame, we have a full-blown break of structure on the 15 minutes because the 15-minute structure or trend is the run of the 4-hour time frame. Okay, and then when you have a change of character on the 15 minutes time frame, you have a clear break of structure on the 1-minute time frame. Okay, so price changed character here on the 4-hour time frame. So I'll be using the color to represent our 15 minutes. So automatically our 15 minutes began to trend lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. The essence of that is to give us the price action. I told you guys prior to this time, the price action simply refers to the behavior of price. Okay, so we begin to get full bearish price action inside of the substructure. Now, do not forget that this is a simple sell to buy model. Why is it a sell to buy model? Okay, we are actually selling to buy. It is a sell to buy model because we are aware that the trend of the 4-hour time frame is still bullish. The structure on the 4-hour time frame is still bullish. And then the trend we are seeing on the M15 time frame is a mere pullback or a mere correction or a mere retracement to the 4-hour time frame level of demand that will sponsor the remaining leg of the buy. Okay, so what we have moving bearish here is not a total downtrend. So we don't get too excited and carried away in the fact that we are trending lower lows and lower highs on the 15 minutes, and then we disregard the fact that the 4-hour structure is still bullish. Okay, so we have bullish structure on the 4-hour time frame as our guide. The only time we'll begin to reason in the direction of the bears 100% is when we are able to violate a strong low. As far as that strong low remains, it is principal. It is protected because we have tons of orders from the institutions and whatever you choose to call it, but we have tons of amazing orders inside of there, and then the house never loses. If price should go below this level, it means the house is taking a loss, and then the banks never take a loss, the house never takes a loss, the big boys would not want to take a loss. Okay, so we are protecting this low. Okay, so price can do everything it wants to do above this low, but we do not have to break this low. Breaking this low only means that we are willing to go bearish. Okay, so we have a 4-hour change of character, but a 15 minutes break of structure. If this was a live chart to transpose that, and then we have lower highs and lower lows price formation, which is just an obvious pullback, okay, to the 4-hour zone where we should have the continuation of price to the upside. Okay, and then we certainly get to that level and we begin to react off that level. Now, do not forget, like I said, your M15 change of character is your M1 break of structure. Your M15 change of character is your M1 break of structure. Okay, so the moment we had this move, change character to the upside or broke structure to the upside on our M15, I want to, in illustration, usher in where we have our entry time frame. Okay, so after we see this happen, we begin to look at the smaller time frame and the behavior of price on the smaller time frame. The break of structure here on our M15 needs to have a certain correction. Don't forget, we were bullish on H4, but because H4 has to retest its level of demand, we had to go full bearish on M15. Okay, so if I can introduce back the H4 white line, we would have a single trend alone down to this point. Okay, and then we continued upwards, right over here. Okay, let me take this out first till I'm done with this analogy. Okay, so we had the 15 minutes break of structure to the upside, which was a reminder of, not reminder, which was a point of information to us that we would be going bullish, but we cannot just automatically begin to go bullish on a straight line. Is it possible? Yes, but is it the best of price action? It is not. Okay, there has to be the same way H4 had to pull back to this point before we could experience buys to the upside. It's the same way the M15, after it has broken structure or changed character on the M15, has to begin to pull back on the M1 to an M15 demand zone, where the next set of buyers will not kick in from. Okay, so this became our break of structure, or change of break of structure rather, on the M1 time frame. We look forward to taking price a bit lower after breaking structure, giving us our new protected low on our M1 time frame. Okay, so this became the new protected low on our M1 time frame, and this should be the weak high, because in theory, price is supposed to violate this high and then continue the trend of the 4-hour time frame. Okay, so we may have amazing runs to the upside. Okay, so this becomes the case straight up. So we've only created a strong low, a weak high, right? We created another weak high here, bettered another strong low here, because this high was violated next in theory. Okay, so that is just the behavior of price inside of substructures. I'll try to recap everything I've explained here again one more time, or quickly, so you can get along with me. The trend of the H4 stays bullish. Why? Because we had violated previous high, and then we have a low that is a protected low, being a strong low, because of tons of orders that the big boys are not willing to violate, because if they do that and then they had not mitigated this zone, it would actually put them in a loss. Okay, so they can mitigate this zone before they drop, which is possible. But then failure to do that, and then we just reacted up this zone, shows that this is still a very strong low. Okay, now, like I said, higher time frame runs and mid time frame trends. The run on our 4-hour time frame would certainly bet a trend, a full-blown trend inside of our M15. The essence of that trend is a mere pullback on the 4-hour. It does not signify that a sell has begun. So do not begin to target, refuse the illusion that makes you begin to target this low or lower prices around here. Okay, you can have that as sub-target, but then primary target should be here or somewhere around this area, because the idea or the logic is that this zone stays protected. A violation of this zone is a change of trend. Okay, so we have price on M15 give us a change of trend, while we have a mere change of character on the 4-hour time frame. The M15 continues bearish till we get to the protected low, where we should meet a new demand level to propel price to move to the upside. The confirmation that we are actually moving to the upside will be the break of structure. Okay, this could be it. Okay, but then I'm keen on this one because I want to assume on this illustration that we had already tested a level of demand here, a level of supply rather inside of here, that caused price to move further away to the demand level. Okay, so a violation of that supply level only brings price to a new demand level. Supply violated transfers power to demand. Okay, so we begin to see price begin to trend, clear trends, lower highs and lower lows on the M1 time frame, while we may have a bearish candle run or 2 bearish candle simple runs, right? We may have just 2 bearish candle simple runs or 3 bearish candle simple runs on the 15 minutes time frame. So we test this zone. Okay, but on the 1 minute time frame, we'll certainly have higher highs and higher lows, clear trend informations of a downtrend. Again, do not be misguided and tempted to want to take heavy sells. We are only trying to react off a demand level, because the theory is that this has become the new protected high, protected low rather, and then price is supposed to stay above this level and not violate this level, because this is a strong low. The breaking of this level makes this a weak low, and then we'll be ready to take out higher prices and then continue bearish. Okay, so M1 does this thing and begins to trend, mitigates the level of demand inside of this zone, and then breaks up. In breaking up, it breaks M1 structure. Okay, a break of M1 structure validates the fact that we are done with our pullback on the H4. Don't forget, in all of these things, we are only trying to pull back on the H4. Okay, so this behavior inside here, okay, is our last confirmation to tell us that we are ready and willing to buy. This behavior inside here of the M15, the M15 break of structure above and begins to pull back, is the first confirmation that we'll be looking to take price higher, but we need price to get to a demand level and actually mitigate the level. So after this happens, that's number one, we'll now be looking forward to number two happening, which is the M1 time frame breaking structure and then coming back to mitigate whatever level or other block it has created inside of here. This should now usher in price to happen on the 4-hour time frame. Now, in the behavior of price, whatever will happen on the higher time frame will first begin to react on the lower time frame. If the higher time frame would buy, the 1 minute time frame would already begin to show you signs and begin to break structure and begin to bet new highs and new lows to signify that a move is cooking on the higher time frame, because the higher time frame would not be able to express the price action that should be giving you confidence or giving you confidence to take the move. So your lower time frame will be free enough to roam around and express the behavior, the actual confidence, the actual price action that you need to signify that inside of this run, or that a run is coming on H4, but you'll be actually be seeing trends, clear trends on your mid time frame, on your lower time frame. And when I say mid time frame, I'm simply referring to the 15 minutes time frame as a mid time frame or the 30 minutes time frame. But for myself, I like to stick with the 15 minutes time frame and the 1 minute time frame, or a few times I do the 2 minutes time frame, depending on where I can see actual clear price action or clear market structure. Okay, so don't forget that. Now on our daily time frame, we are looking at the same perspective. What is the perspective for the day? What is the general, the overall trend of the markets for the day? Are we bearish? Are we bullish? If we are bullish, what is the run? Where do we have momentum? The current momentum forming, is it a bullish momentum or a bearish momentum on the current 24 hours candle? Now, if the current 24 hours candle that just closed is a bullish candle, it means we have a bullish trends on our 15 minutes time frame, while we just have a single candle run on our 24 hours time frame. Okay, and then we drop down to the 4 hours time frame to look for the narrative. The narrative is where is the previous swing high or previous swing low, or recent swing high or recent swing low, or recent high, recent higher low, recent lower high or recent lower low. Now, what is happening inside the range? The range is the distance between this high and this low. Okay, I want to know what is happening inside the range. What is happening inside of this range from here to here? What is happening inside of here? Okay, what is the price action inside of this range? Okay, in discovering the price action, we want to see if we have changed character or we are still in the move. If we have changed character, we want to go to the lower time frame and now see on our M15 what is the immediate bias. The immediate bias means what is the price action? What is price doing? Are we forming lower highs and lower lows, or higher highs and higher lows? Or are we just ranging, or are we moving side? What is the immediate bias? That will help shaping my decision on what to do. Okay, and then we move down to the lower time frame, which is my 1 minute time frame, where we begin to look out for our entries and manage our risk, as well as look out for confidence on why we should be taking this trade, if we should be taking the trade. Okay, that's where we get to see our confirmations and all of that. Look forward for simplified Wyckoff schematics, and then have all that one. Okay, I want to believe that this was expository enough, and then I look forward to meeting you guys on the next time we'll be live, or sending new videos for you guys as we improve or make progress trying to understand smart money concepts. So one more time, this is the multi-time frame structural correlation, and my name is Dr. Banks. I hope you all have an amazing, amazing night rest.